RSS3 is up 35% in the last 24 hours. It has a market cap of just under $10 million. Everyone searching for this coin right now wants to know if this is a genuine breakout driven by its Coinbase and Dragonfly backers, or just a low liquidity spike with no real momentum. We are going to break down the protocol, the funding, and the risks so you can decide for yourself. If you want honest, data-driven research on every major pump without the hype, please subscribe and like this video. This channel covers the ugly parts of crypto so you do not have to guess. RSS3 describes itself as a next-generation feed protocol. Its goal is to fix the fragmentation of the modern web. Right now, social media and content are locked inside walled gardens. You cannot easily follow someone from Twitter on another platform or aggregate your content across different apps. RSS3 aims to make the open web readable, portable, and accessible again. It does this by creating a standardized way for users to follow, aggregate, and share content without relying on centralized intermediaries. The protocol leverages RSS Hub, which is one of the world's largest open-source feed aggregators. RSS Hub supports thousands of routes to convert fragmented web data into standardized formats. This allows RSS3 to index and distribute social and content-based data rather than just financial transactions. The infrastructure includes a value settlement layer, which is a dedicated Layer 2 network. This layer is built to handle high-frequency information processing with high throughput and low latency. The standard enforces strong data ownership. This includes asset verification and on-chain governance. This enables interoperable interactions between different applications. The use cases for this protocol include decentralized social networks, content platforms, AI training feeds, metaverse apps, e-commerce platforms, and games. The token is currently trading at approximately $0.00621503. It has seen a 2% increase in the last 24 hours. The market cap is roughly $9,449,352. The 24-hour trading volume is $2,692,376. This volume is significant relative to the market cap, indicating active trading. The verified data shows a 2% price increase over 24 hours. The market cap is $9,449,352. The trading volume is $2,692,376. The token is listed on CoinGecko with the ID RSS3. It is categorized under artificial intelligence, infrastructure, storage, and the Ethereum ecosystem. It is part of the Coinbase Ventures portfolio and the Dragonfly Capital portfolio. There are 0 tweets in the last 24 hours from the followed accounts corpus. The hashtag is not on the emerging board. Inference: the pump is likely driven by institutional interest or a specific partnership announcement. The high-profile backers include Coinbase Ventures and Dragonfly Capital. The lack of retail hype, indicated by 0 social volume, suggests this move is not being driven by community sentiment or viral marketing. Instead, it may be a reaction to news regarding the project's technology or funding. The low market cap of under $10 million means that even a small amount of buying pressure can cause a large percentage move. This is a common pattern for low-float tokens with strong institutional backing but low public awareness. RSS3 has secured backing from several prominent venture capital firms and industry figures. The investor list includes Arweave, Balaji Srinivasan, Coinbase Ventures, CoinShares, Dapper Labs, Dragonfly Capital, Fabric Ventures, Formless Capital, Hash Global, Hashkey, Sky9 Capital, and Yaobai Capital. Notable individuals and entities in the investor list include Balaji Srinivasan, Mask Network, and Miss Bitcoin. The specific names of the core development team are not detailed in the provided sources. The project emphasizes a community-driven approach. This involves node operators, route maintainers, and developers who contribute to the ecosystem. The protocol relies on a distributed network of nodes that can be run by users on various devices, including servers, laptops, and mobile phones. The genesis date of the token is unknown based on the available research. There are several risk flags that must be highlighted. First, the social volume is zero. There are no tweets in the last 24 hours from the followed accounts corpus. This is unusual for a project with such high-profile backers. It could indicate data lag, but it could also indicate genuine apathy or a lack of active community engagement. This makes it difficult to gauge sentiment or detect early signs of a pump or dump. Second, the market cap is very low at under $10 million. This makes the token highly susceptible to manipulation. A small amount of capital can move the price significantly. The trading volume is high relative to the market cap, which can be a sign of wash trading or coordinated buying. Third, the team is not fully transparent. The specific names of the core development team are not detailed in the provided sources. This lack of transparency is a risk factor. Investors cannot easily verify the track record or reputation of the developers. Fourth, the tokenomics are not fully detailed in the provided research. The circulating supply is approximately 987.53 million tokens. The max supply is 1.06 billion tokens. This means that nearly all tokens are in circulation. However, the research does not specify if there are upcoming unlocks or vesting schedules for early investors or the team. This is a critical piece of information that is missing. If there are large unlocks coming, the price could drop significantly. Fifth, the audit status is not mentioned in the provided research. It is unknown if the smart contracts have been audited by reputable firms. This is a significant risk for any protocol handling user data and funds. Sixth, the liquidity is not explicitly detailed. However, the low market cap and high volume suggest that liquidity may be thin. This can lead to high slippage when trading. Finally, the research was degraded in terms of specific team details and audit status. This lack of information is a risk flag in itself. Investors should proceed with caution and verify these details independently. For RSS3 to hold its value and grow, it needs to prove that its technology is superior to existing solutions for decentralized social and content distribution. The protocol must attract developers and users to its value settlement layer. The high-profile backers provide credibility, but they do not guarantee success. The project needs to build an active community and demonstrate real-world usage. The downside looks like a rapid decline in price if the pump is found to be artificial or if there are negative news developments. The lack of social volume and team transparency adds to this risk. The low market cap means that the token can be easily manipulated. Investors should be aware that this is a high-risk asset. The potential for loss is significant. There are no price targets to consider. The decision to invest should be based on a thorough understanding of the technology and the risks involved. If you found this analysis helpful, please subscribe and like this video. It helps us continue to provide honest research on every major pump. Which coin should we break down next? Let us know in the comments below.